Everybody, welcome back. We're actually going to talk about the infinite banking. We're going to talk about term insurance, actually, and why it's actually a good idea. I know I talk about whole life. We'll talk about IULs a little bit, not today. I know I talk about whole life a lot. There is definitely a place for term insurance, term life insurance in your portfolio. We're going to talk about why. We're going to talk about what it looks like, talk about all that stuff. So what is term life insurance? Well, it's exactly what it sounds like. It's life insurance for a specified period of time. The most common time frames are 30-year terms, but you can get it 5, 10, 15, 20, 25, 30-year term. Well, I'm 35 now. If I were to buy a 35 or a 30-year term policy today, it would be good until I turn 65. Now, why would somebody get a term life insurance policy? Well, number one, they're really inexpensive. The most recent term policy I wrote was for $1 million in coverage for like a 26, 27-year-old guy. It was like $40 a month for $1 million in coverage. He had a family, a couple kids. So you can get it for really inexpensively, as opposed to say like a whole life where, you'll be covered for your entire life, but you're also paying more premium to have that type of coverage. So if you feel like you don't need, the coverage for your entire life, you just get it for a time period in your life, specifically when you're younger and you're more, financially insecure. So if something were to happen to you, God forbid, if something were to happen to you, your spouse and your children will be taken care of. The mortgage will be paid, bills will be covered until they can figure out next steps. That's exactly what term life insurance is for, right? Who should get life insurance? Everybody, especially if you have a family. Obviously, if you're single, you don't necessarily need it just because there's nobody to pass stuff on to financially. But if you got a family, you got to get it. Because if something, speaking from personal experience, my dad passed away suddenly in 2018, and, he didn't leave us anything behind that we know of. And my sister and I had to come up with $6,000 out of pocket to have him cremated. So if you want your family to go through a situation like that, be my guest, don't get anything, but you're just a terrible human being if you don't have life insurance. The next question that we usually get when it comes to term life insurance specifically is, how do I know how much to get? A good rule of thumb is whatever you make now for, per year, multiply that by 10, and that's how much coverage you should get. So that way, when you do, if you do pass away before you're expecting, then, your spouse and children will be taken care of for, a 10-year period. So say somebody that makes $120,000 a year, they could get coverage for $1.2 million. So that way their salary for over a 10-year period is covered. Their family can pay the house, pay bills until they figure out, what's next financially. But like I mentioned earlier, term life insurance is really inexpensive. So, if you make more money or you make less, you could just get a different policy. No big deal. You're not financially committed to paying it as you would, say something like a whole life or like an IUL, for example, if you want them to work. But with the term, you can just, if you make more later on, just get more. It's not going to be that much more. You might have to do a medical exam, but that's not really a big deal. Now, the younger you are, the thing to know with life insurance in general is that the younger you are, the cheaper that your life insurance is going to be, just across the board. Now, obviously, if you have some health conditions, it is going to raise the price a little bit. But how insurance companies work is they are pricing their premiums. It's cheaper to insure somebody that's not going to die sooner than somebody, that's say 65 and is, susceptible to, a whole myriad of medical conditions, and they're more likely to need it. The younger you are, the sooner you can get it, the better. It's going to be cheaper. There are some companies where your premiums will go up as you get older. But if you can find a level term policy, I wrote one for somebody the other day. If you can find a level term policy to where your premiums stay the same for as long as you have the term, get that. There are other term policies where, if you don't ever use, if you don't die within the window that your term covers you for, you can add a return of premium waiver on there. It's going to be about double what a normal term life insurance policy is going to be, but you get all your premiums back at the end if you don't use it. How does a term policy fit into somebody's financial portfolio? Now, if you know anything about personal finance, hopefully this is not the first time you've heard buy term and invest the difference. So what that means is, like a whole life insurance policy is basically like the Cadillac of insurance. You're covered for your entire life. It is expensive, but considering what you get, there's trade-offs for everything. So as far as where a term policy fits into a financial portfolio is you take the difference between what you would spend on a term policy, what you would spend on a whole life, you subtract the two, and the difference between the two is what you put into the market, the stock market, every single month through like a Roth, an IRA, vehicles like that. You put it into the market, you grow it, and then by the time that your term coverage expires, hopefully you have a big enough nest egg to where you can live off of that for retirement. You can pass something on to your family, your children when you do pass away, and it can cover basically all your medical expenses, because you're going to have medical expenses. When people are older, they're more susceptible to all kinds of medical conditions. But as far as where term policies fit into a financial portfolio, that's how people generally do it. Term life insurance is a huge profit center for insurance companies because these policies don't ever pay out, and that's fine. They're not necessarily designed to do that. But hey, if you're, early 20s, just getting out of college, you don't have your financial feet under you yet. Maybe you started a family young, maybe you're married, you should be looking at term insurance like yesterday. It's going to be really cheap. Just so you know, insurance companies know that their term policies aren't going to pay out. So that's part of the reason that term insurance is so inexpensive. The other thing to know with term policies that not a lot of people realize until it's too late, unfortunately, is that, say if you have a 30-year term, I'm 35, so let's add 30 years, say I'm 65, my term insurance runs out. Maybe I want the extra financial protection, so I want to look at renewing my life insurance, or maybe my nest egg isn't as big as I thought it would be, so I need the additional financial coverage for when I do pass away. If you remember what I said earlier in the video, when these insurance companies are pricing their premiums and somebody that's more risky and more likely to die soon, that insurance is going to be way more expensive, like multiples more expensive than what you were paying when you actually had the active term coverage. So when you are considering when and how much term insurance to add, or just insurance in general, that is something to consider, is that when you do turn 65 or whenever your term runs out, to renew it, it's going to be sometimes prohibitively expensive because these insurance companies don't want to necessarily lose money paying out a claim to somebody that they know is going to pass away soon. So in short, term life insurance exists to transfer the financial risk of you being early in life and not having your financial feet under you. It gives you some cushion if something were to happen to you. Now, term insurance is designed for you to not need it as you get older, hopefully because you're investing in the markets, and hopefully because the markets are continuously going up, that you won't need it anymore. So that's exactly what term insurance is designed for. I help a ton of people with, that are investment minded and they're dedicated and committed to investing. That's fine. You can do buy term and invest the difference all day long. I don't have an issue with that at all. I know I kind of rag on, markets and 401ks and all that, but there is definitely a place for, term insurance, investing in the markets. There is 100% a place for all that. As far as where to get term insurance, there's a couple different ways you can get that. Obviously, you need to find an agent. With term insurance, it's very ubiquitous, meaning it's everywhere. So if you just Google an insurance company, odds are you're going to come across, an engine, or you come across Dave Ramsey's website, but you'll come across really like I said, all insurance companies have a term life insurance quote generator on their website. If you have a ton of time and you want to look and compare all of those companies, that's fine. If you're going to go with an agent, this is where you're going to save some time as far as picking a company. There's two different types of insurance agents. There's captive agents, meaning that they can only work for one company and sell only that company's products. So, like State Farm, Nationwide, Primerica, all of those agents, generally speaking, are captive agents. So they can only sell those companies' products. If you're going to work with an independent agents, I'm an independent agent. We're contracted with a bunch of different insurance companies to sell their products. So there can be a lot of customization and tailoring. And, we'll do all the work as far as finding you. If you're looking for the cheapest quote, we can find you the cheapest. If you're looking for a company that's, when you do pass away and your family's going to have to deal with getting the money from the insurance company, if you want an insurance company that's easy to work with, whatever your criteria is, we could find you the best quote for that really easily and really quickly, as opposed to, say, like a captive agent. There's nothing wrong with either path. It just depends on what you're looking for. So if you need some help with that, I'll put my calendar link down in here. We can chat about it. I can see if I could help you. No worries if not. Either way, that's what you're looking for if you're going to deal with an agent specific.